Good morning, everyone. My name is Amani Abou Zeid. I'm African Union Commissioner, as you heard, and I'm in charge of infrastructure, energy, ICT, and tourism. And maybe this ICT bit is what brings me here to you today. Mr. Wolfgang Engel, General Manager and Chief Representative, Middle East and Africa Region, IIF. Mr. Hisham Az Al-Arab, Chair of Federation of Egyptian Banks and Chair of CIB. Mr. Ehab Nasr, ably representing the Central Bank of Egypt. Distinguished participants, ladies and gentlemen. It is unanimously and widely recognized that digital technology has a significant impact on the global economy. Digitalization not only translates into high growth, rapid innovation, and broad application to other economic sectors, but digital technologies also set the conditions for enhanced participation in international value chains, facilitates market access, and lowers transaction costs. Digitalization is thus key for socio-economic development, and its impact is steadily increasing. In Africa, the digital economy is expected to grow to over 300 billion by 2025, on the back of massive mobile penetration, where Africa has shown double-digit growth in the first half of this decade. By the way, the penetration of the internet in Africa is the fastest in the world. However, the benefits in Africa are not shared equally. Only a third of Africans have access to internet. It is estimated that only 43% of adults across Africa have a banking account, despite the fact that in a country like Kenya, for instance, nearly 2/3 of all adults are active customers of a mobile phone-based money transfer and payment services. And in a country like Mauritius, we have 95% in terms of social inclusion, in financial inclusion. Knowing the importance and the catalytic role of financial inclusion through convenient and suitable digital financial services for poverty reduction and sustainable economic development of national and regional economies, I would like to commend the work of the Institute of International Finance. Indeed, by providing support to the financial industry in the prudent management of risks, developing sound industry practices, and advocating for regulatory, financial, and economic policies in a view to foster global financial stability and sustainable economic growth, IIF is carrying out a very noble mission towards financial services for all and everyone. In the same vein, I'm very pleased to welcome the IIF Digital Financial Inclusion Summit in my hometown, Cairo, as it offers a platform to discuss pertinent topics, including mainstreaming financial inclusion, cross-border interoperability, digital identity, and partnerships between financial service firms and new startups, and public-private partnerships as major opportunities and challenges, in some cases, we are facing with regard to financial inclusion. I can assure you, Mr. Engel, your battle is also, in a way, ours at the African Union. I am also grateful to both IIF and CIB for engaging the African Union Commission in this important event and for bringing me home for this event. Ladies and gentlemen, Africa is known as the most youthful population in the world, as 65% of our population is below the age of 35 years. At this age, our population is enthusiastic in the use of technologies, among other purposes, for business through establishment of SMEs and microenterprises, which the position is, according to the UN Secretary General High-Level Panel on Digital Cooperation, one of the best indicators of inclusiveness in the digital economy, as they can be most directly affected by the lack of effective regulation, unfair competition, cybersecurity threats, and data hoarding. Digitalization is therefore of paramount importance for Africa and for the African Union. We are conscious that access to finance and financial inclusion is a key driver for digital transformation and for development of our countries. It is expected that financial inclusion plays increased significant role in the digital economy given the opportunities offered by faster payment infrastructure, digital currency, emerging technologies like blockchain technology, and the growing e-commerce. Of course, you know that we launched last year and made effective in July the African Free Trade Area. We are thrilled that Africa's technology scene is booming. A significant contributing factor has been the proliferation of tech hubs, including incubators, accelerators, and co-working spaces in major urban centers such as Nairobi, Lagos, and Johannesburg. 45% of these tech hubs, we have about 442 across the continent, are concentrated in 5 countries: South Africa, Kenya, Nigeria, Egypt, and Morocco. The cities of Lagos, Nairobi, and Cape Town have emerged as internationally recognized technology centers. With over these 440 tech hubs that range from software engineering to mobile money to blockchain technology, global businesses, which have long relied on workers in far-flung locations for technology services, now have African techies on their radar, and we are so proud of that. There is no denying that financial technologies has brought new hope, new dimension, and potential in Africa's market. This is evident from huge investments by the big giants themselves. Africa is financially recovering and is home to the world's fastest growing economies, as you know. And for every startup, Africa has become a hotspot. By the way, 6 of the fastest growing economies in the world are Africans, and the majority of the 30 fastest growing economies in the world are also African. Speaking of fintech and mobile money, as I said, Africa leads the world in both per capita registered and active mobile money accounts, mobile money outlets, and volume of mobile money transactions. Africa is also home to countries with the fastest growth in mobile money. Indeed, the number of mobile money accounts in most African countries has now surpassed bank accounts. Although most transactions are used to send and receive domestic remittances, transactions are increasingly being used for domestic transfers such as paying utility bills, receiving wages, and paying for goods and services. Fintech providers are leveraging their experience and large customer base in payment services to provide other financial services, especially across borders. In response to the large unmet demand for credit services, cross-border payments, investment products, and insurance services on the continent, innovators are introducing new types of financial products to fill the gap. Kenya's mobile network operators, partnering with banks, have led the way in innovations, offering access to formal savings, loan, and insurance products such as Safaricom, M-Shwari, and others. Similarly, Zimbabwe and Kenya's Family Bank recently launched an instant payment service connecting East Africa to China. A new crowdfunding platform by Kiva and Zuna in South Africa gives individuals around the world the opportunity to offer small loans to entrepreneurs. Ladies and gentlemen, cognizant of the role of digitalization and particularly financial inclusion for the future of the continent, African governments are at the forefront of efforts to harness digital technologies to build more inclusive economies. Steps are being taken to address the key challenges, including required infrastructure, digital skills, adequate regulation, cybersecurity, data ownership, innovation, last mile access, and effective partnerships, to name but a few. In the light of the above, the African Union has been developing initiatives to ensure that the continent fully harnesses the benefits of the digital economy on one hand, and Africans' rights are fully and equitably taken care of on the other hand. We believe that physical and financial access to resources, markets, social services through an optimal and efficient use of digital technologies, taking advantage of the Revolution 4.0, can help our population, especially women and youth, access various opportunities and enrich our livelihoods. I'm not going to go through all the initiatives we are implementing at the African Union. We have, of course, the e-payment system launched also by President Sisi last July in the summit. We have the cybersecurity, the skills for young people and for women to code, the infrastructure, of course, for the ICT infrastructure, just to name again some of the initiatives that we are undertaking. I'll be happy maybe to provide more information if you need on this one. But more important is that only 2 weeks ago, we launched the Africa-wide digital transformation strategy. This was developed in an inclusive approach and is built on foundation pillars. Why we are doing this? Because we recognize that on the continent, we have 55 countries, different approaches to digitalization, different levels of development and different speeds. We want to harmonize all this in a coordinated manner and work together and move forward and leap forward in the digital era together. So our digital transformation strategy is built on foundation pillars: enabling environment, policy regulation, digital infrastructure, digital skills and human capacity, digital innovation, and entrepreneurship, with critical sectors such as digital industry, digital trade and financial services, digital government, digital education, digital health, digital agriculture. To drive the digital transformation, there are some cross-cutting themes, such as digital content and applications, digital ID, and we went a very long way in terms of digital ID on the continent and to identify the common criteria we need in all digital IDs in all countries, all African countries. Emerging technologies, cybersecurity, privacy and personal data protection, research and development to support the ecosystem. Ladies and gentlemen, the smooth implementation of those initiatives, in particular the digital transformation strategy and the cybersecurity convention, requires your strong support. I will therefore seize this opportunity to appeal to all of you and to all of your countries for the acceleration of the adoption of the Malabo Convention for Cybersecurity and Personal Data Protection. Remember, this is our convention in Africa, not someone else's. If we are to deal with each other through all the integration facilities and the African Free Trade Area, we want to make sure that we are reading from the same page. Africa, as I mentioned, is a global leader in mobile money adoption, usage, and innovation. The challenge now is to go beyond the success in payments to meet the unmet demand in Africa for other undeveloped financial services that can facilitate digitalization of other segments of the economy. Meaning, if mobile money was the first phase in the development of digital finance in Africa, the next phase of digital financial services on the continent should focus on lending, insurance, and wealth management. And what am I saying? This is an immense opportunity for you. However, we need to fill the large existing the large gap in infrastructure, establish appropriate mix of energy sources to generate electricity, and it's not delinked from what we're saying, because more than half of the population of Africa does not have access to electricity, so do not have access to internet, so do not have access to these financial services. So energy is key. But second, we need to address the perennial race between fast-moving innovation and the slow pace of regulation. There is a trade-off between catalyzing and supporting rapid innovation and taking the time to identify and manage associated risks in order to ensure financial stability and integrity. Given that fintechs rapid evolutionary pace in Africa, regulators are currently struggling to do so. As they do catch up, they need to be flexible enough not to stifle innovation. Since Africa is dominated by small value payments, proportionality, the balancing of risks and benefits against costs of regulation and supervision is important. Regulators should thus focus on specific challenges such as price and financial stability, consumer protection from fraud, cyber risks, and low financial literacy. Regulatory sandbox could be a useful approach to follow if tailored to different objectives, legal structures, and levels of financial development. In the areas of anti-money laundering and countering terrorist financing, efforts to ensure appropriate identification are needed. Third, we need to consider fintech's impact on employment and productivity, the digital economy, and more broadly, much needed structural transformation of our economies. We must elaborate policies that can leverage human capital, such as improving financial and digital inclusion and ensuring the adequate provision of financing to new sectors. For instance, appropriate education policies should include financial literacy and skills upgrading. We need a forward-looking approach to the type of jobs and the future of jobs that will be needed in a digital economy and provide the relevant skills and education. Similarly, we need to assess how competition in different sectors will affect the landscape of a future e-economy. Ladies and gentlemen, there is a quote often attributed to Charles Darwin that says, "It is not the strongest of the species that survives, nor the most intelligent. It is the one that is most adaptable to change." Now, change is happening within us and around us. So I have a small variation on the quote. It is not the strongest of institutions who will survive, not the biggest, but those who are smart enough to adapt to change and those who can best manage change. And I thank you.